and gentlemen, welcome back to the channel. In this episode, we're going to be discussing Rezolve AI, the under-the-radar AI stock that I believe is about to make a move higher. And now I'm going to tell you why that is, what the catalysts are upcoming, and what changed today. We've actually seen short sellers really double down on their short positions in Rezolve. Now, there's one big thing you need to know here, and that just means the stock is more shorted now than it was before. Not that the shorting pressure is going to continue, but it helps to explain some of the downside that we have seen recently. Now, what does this mean when short sellers begin to cover? Well, some pretty explosive upside could ensue. Now, we have some big catalysts upcoming for Rezolve specifically and for the broader markets coming tomorrow. And, well, these are going to be the main movers for Rezolve. And today was a little bit more of a risk-on day than other days. That's for sure. Rezolve was still in the red today, but not nearly as bad as you would think, considering other stocks like JP Morgan are down 4% today. There was more of a risk-on appetite with the Russell that outperformed the S&P by about 3x. Heading into tomorrow, that's telling you something. Bitcoin is also telling you something. It's actually screaming at you today. We'll discuss that as well in today's episode and what this means specifically for Rezolve. Do me a quick favor, ladies and gentlemen, before we get into all of this key information, hit that like button as well as subscribe to the channel if you have not done so already. If you guys want to come join the trading community, check that link out down below in the description of today's episode. So let's dive into this one, okay? We all know what Rezolve's big upcoming catalyst is. At some point in December, who knows? Could be at night sometime, it could be in the morning sometime, literally any moment now. We're going to get news of updated 2025 ARR. Now, again, as I've made the argument before, logically speaking, Rezolve does not need to update investors on ARR in December, okay? They have to update investors in March when they report earnings. So the only reason they would update investors, in my opinion, is if they were going to beat ARR. So in my opinion, there's a 99% chance we are going to get a positive catalyst from Rezolve in December. Something that is material that could move the needle for the stock. I don't know what that ARR number for 2025 is going to look like. Could be as high as 250 million in a really optimistic scenario. Could be 200 million, could be 160 million. There are implications for all of these numbers. And the higher the better, clearly, but the higher the number, the more the business is growing organically, minus acquisitions. That's a big question I have because we don't get contracts that are shared with us all too often. And people always ask, like, why does Rezolve not share contracts? I think part of it has to do with non-disclosure agreements. I think companies, it's pretty standard. They don't want their business spread out there unless they want it spread out there, right? A lot of these companies are probably going to sign non-disclosure agreements when they enter into these contracts, okay? That's one explanation. The other explanation is Rezolve just doesn't have any contracts, and I don't think that is the case, okay? Now, back in September, Rezolve gave us guidance for 90 million in ARR, or that they already hit 90 million. And then on earnings, they said they hit 110 million. Well, they bought Crown Peak, which adds 70 million to revenue next year. Okay, so even as the Maxime Group recently said, it says here, in Rezolve's October 2025 first half 2025 earnings release, the company guided to a minimum of 150 million ARR exit rate for 2025. We believe Crown Peak's approximately 70 million in revenue will materially support progress towards that objective. However, it is important to highlight that this contribution should be viewed as already reflected in the guidance rather than additive, as management's framework had already incorporated the impact of acquisitions. At the time, ARR had reached about 90 million by September. And while we acknowledge the potential for upside, given that simple math could imply ARR progressing beyond the 150 million mark, we continue to view the 150 million target as appropriate, providing necessary execution flexibility during a period of hyper growth. Okay. In our view, this approach maintains a reasonable buffer for the company as it scales. Okay. So they're basically saying, hey, simple math says Rezolve has already beat 150 million in ARR. Okay. Now, the Maxime Group put a $15 price target on Rezolve with a buy rating. That is over 600% upside. And this price target, reiteration of the price target, came out on December 2nd when the stock was $2.73. That is literally where the stock is today. $2.73, 73.5 cents. Okay. So we know we're going to get a guidance raise at some point, or guidance beat for 2025. Okay. Now, how does that impact what analysts think, price targets, any of that? We'll see. I'm sure it does spark some price target revisions to the upside. I believe next year is going to be a big growth year for Rezolve, organically, and probably another acquisition or two at Rezolve speed. But I do think we're going to start reporting on a quarterly basis in March. And I think that's also another big catalyst for the stock, because any legitimate company reports on a quarterly basis, even when they don't legally have to. Like any UK-based company that is listed on US markets, I can't think of one of them that actually reports on a biannual basis that is a large company, right? It's just, people want quarterly updates. That's the standard, and people want that. So I think that is another catalyst that is to come in March, along with any kind of guidance raises or anything like that. But what we're seeing today and what's shaping up for tomorrow, I think looks really good in the near term for AI stocks and for hyper growth companies, right? For small caps in particular. Look at Bitcoin. Bitcoin up 4.5% today. If you look at the 1 hour chart, you are breaking your prior highs on December 3rd. You are back to levels you have not seen since November 17th. Bitcoin leads, okay? Bitcoin reacts first, okay? So if Bitcoin begins to rally, that usually means in the coming hours and the next day or so, risk-on stocks begin to rally as well. Now, we'll see what happens with Bitcoin. Bitcoin has been very volatile recently. Look at this chart. It's been all over the place. It's been as low as 84,000, 83,000 and some change, as high as 94,000. These are 1 hour charts. So this is just a couple of days, essentially, right? A week or two worth of price action for Bitcoin. It has been all over the place, but it does suggest that you are likely going to see some upside in the coming hours. And I think it's no coincidence that some of your risk on or small cap AI stocks did a little bit better than other areas of the markets today. Now, the other story I want you guys to be familiar with is Oracle. If you don't know what happened with Oracle during the crash of this market we just went through, it's actually pretty simple. Oracle, their corporate bonds, their 20, 30-year bonds that they sell to raise capital, okay, their interest rates went between 8 and 12%. Okay, that is seen as penny stock like risk levels, right? That is not good. This caused Oracle to really sell off from the all-time high following their last earnings, in which they went up 35%. Oracle came down 46.2% from its high, found a low, and it's still down almost 36% from that recent high on last earnings. Okay, part of this is because a almost $1 trillion company like Oracle, it's very unusual to see a 40+% decline on a stock like that. It's very unusual to see a bond market blowout on a stock like Oracle. Okay, very much not a common occurrence. So people had some questions around the AI trade, around how, Oracle is operating their business, and generally on the AI trade, I would say. Oracle reports tomorrow in after hours. They're going to tell you things are great. They're going to beat guidance. They're going to raise guidance. It's going to be a typical quarter from Oracle. And that could really spur some activity within the AI stocks. You think a stock like Oracle, $1 trillion, AI company, goes down 40%. It's no shocker that a lot of these other stocks that you may own went down a lot more than that. I mean, Oracle down 40, Rezolve down 60 is quite logical to me, right? That makes a lot of sense from a purely numbers basis. Now, Oracle doing well could really spur this market, but I think the even bigger catalyst to that is the Fed. Now, you're going to get the Fed tomorrow, and I'm going to share with you at 8 p.m. the expectations that Wall Street has, right? We're going to go in further depth of my expectations and what could be coming next and all of that. But we do get the Fed tomorrow. We get a new dot plot and we get a rate cut. Okay. We're going to get a rate cut. 85% chance of a rate cut. The question is, what does Wall Street think the Fed is going to do after December? Okay. The answer, I believe, the most likely thing we're going to hear tomorrow is the Fed doesn't know. The Fed is going to leave their options open in either direction. Why? Because the Fed knows the markets determine what the Fed does more than anything else. The data determines how the markets price in Fed cuts. So the Fed doesn't want to box themselves in either direction, right? They don't want to commit to cutting rates too much next year. I think they're going to give us like 1.5 cuts priced in on the dot plot tomorrow, but they're not going to want to commit to more than that. They're not going to want to commit to a pause either. They're going to basically come in line with markets expectations. Why? Because they don't have the November jobs report. They're not going to have the December jobs report. I don't even think that we have the October jobs report yet. That data comes out next week. Okay. So what sense would it make for the Fed to rile up markets if things could dramatically change next week? That just, to me, would not make a lot of sense at all. Now, the other part of this is, if the Fed does want to rile up markets, good luck. We're not pricing in a cut in January. We're not pricing in a cut in March. We're not pricing in a cut in April. We're pricing in a cut after a 6-month pause. You're pricing in your first rate cut of 2026, June 17th. 40.4% chance of a cut, 24.8% chance of 2 cuts by June, and 24.6% chance of no cuts. So even if the markets were like, okay, the Fed's not going to cut in June, there's a 24.6% chance of that today. If those odds go up a little bit after the Fed, it's not like there's a 5%, 3% chance of not getting a cut by June. There's almost a 25% chance of not getting a cut by June of 2026, right? And only a 40% chance that we get our first cut in June. Okay. July, you're pricing in a pause. September, you're actually now technically pricing in another cut at 31.1%. That we'll get our second cut in September, and 31.0% chance of a pause, right? So September, kind of a battleground contract here. October, you're pricing in a pause, and December, you're pricing in a pause. So you're pricing in technically a cut in June and a cut in September, and that's it next year. Okay? You don't have super bullish expectations of a bunch of easing next year. Okay? Part of that's because the economy looks to be doing okay, which is ultimately better than Fed cuts. You do not want a recession if you're investing in AI stocks. You do not want a recession if you're investing in this market, right? That is not what you would want. You want a strong economy. You want a strong labor market, and you want inflation to come down. And inflation coming down giving us cuts, that's the best case scenario. And I think that's what Wall Street is saying. Like, hey, the economy is not weak enough for cuts, but if inflation comes down next year, as we think, we're going to get 2 rate cuts. I think that's the narrative that is starting to grow out there. Okay, so the Fed being in line with the markets, okay, and as some major banks are suggesting, the Fed might start to buy billions, tens of billions of dollars in short-term bonds, which is not as much QE as it just is providing liquidity. Now, that's something that's important. The Fed providing any liquidity at all is going to be seen as a big positive for this market, and a big positive likely for Rezolve as well. And I think Rezolve is one of those under the radar stocks that just, it can't thrive in a market with this much fear, right? AI stocks generally have not thrived for months, okay? Between the government shutdown and the uncertainty around the effects of that, the uncertainty around the economy and around the Fed, small caps, AI stocks in particular, still have not caught, level ground yet. They've started the process of bottoming, and I think we're in the process of recovering here in the coming days and weeks. But the Fed is going to be a big addition to that. So I think tomorrow, following the Fed, following Oracle earnings, we do get a pretty explosive move to the upside. Now, I will pivot that with saying it's not unusual to see the market sell off after the Fed and then rally the next day. So it wouldn't shock me if the Fed does exactly what I think they're going to do, but it's a, buy the rumor, sell the news event. We sell off after the Fed, and then Thursday we have a really good day. That wouldn't shock me either, and it wouldn't shock me if we just rally after the Fed on Wednesday as well, tomorrow. Okay. Now, mix that with a presumed guidance beat for 2025 ARR from Rezolve. We'll see if they update 2026 ARR or not. That is going to allow quite a rally with Rezolve, and we'll see if we get any other details here. But if we can get above that 20-day moving average at $2.92, which is not too far off of where we are now, you would need to see about a 6.5% rally, and you could get above your 200-day moving average at $3.08. You would need to see about a 12.5% rally. That opens up a lot of runway here back to the 50 or 100-day moving average, which kind of in the midpoint of these is a rally of about 52%. So, wouldn't shock me at all if Rezolve could soon be a $4 plus stock again. I think the catalysts are there. I think we're gearing up for a move like that. But, tomorrow is going to be a big day for that. I think from a technical perspective as well, you kind of have this inverse head and shoulders pattern. It's kind of a cockeyed, like sideways head and shoulders pattern. Like you have a shoulder here, looks like the neck and the head down here with our recent low of $2.43, and a little bit of a shoulder here. Wouldn't surprise me if we can, make a move to the upside. Now, again, I view it as a low likelihood of a, bearish Fed tomorrow. It would have to be political at that point if Jerome Powell gets on the podium and just starts saying crazy shit, because it makes no logical sense why the Fed would commit to any one direction before huge economic data coming next week that'll move those odds for the Fed, right? Again, if the data is weak, markets are going to price in more cuts regardless of what the Fed says. If the data is strong, the markets are going to price in less cuts regardless of what the Fed says. It makes zero sense to send a strong signal here. Okay. Now, as we mentioned, Rezolve short interest has also risen quite a bit recently. From some of the lower levels we were at in the 4 or 5% range at the end of November to where we are today, estimated at 11.4%. This explains some of the weakness we have seen in the stock. Short sellers have really attacked this one as of recently, okay? Short interest has more than doubled. But there's something very important to point out here. This helps to explain the downside in the stock. It does not mean further downside is coming, okay? It could be quite suggestive of the opposite. If you have a lot of short interest and we do get good news, we do get updated ARR, which I don't like. The guys shorting Rezolve, I don't think they know we're going to get an ARR update in December. Okay, like you really have to be following the stock for this. Why? Because it was one comment that Dan Wagner made. Let me see if I can find this real quick. If I go to Dan Wagner's X account and just click on the replies, let's see if we can find this. Okay, find this comment from Dan. It was a couple weeks ago. Okay. Okay, look. So on November 15th, almost a month ago, Carlos said, Dan, my family office has a significant amount invested in Rezolve. I like the vision, but we need an update versus ARR 2025 targets. When can you give us some flash report? Dan Wagner says December. Okay. This comment has 725 views on X. I don't think these hedge funds and institutions that are short in Rezolve even know that a December ARR update is coming. Okay. So even then, a lot of the short positioning these days happens from algorithms. Okay. So they're flying blind here, and we know that this big update is coming. Okay. Wouldn't shock me if we do get really good news and, some shorts try to cover on short positions and really push the stock higher. Now, Blueberry Coconuts on X also says, if you make her rich, she will forgive you. If you make me rich, I will forgive you too. Announce the deals, report quarterly, update current ARR. Simple. Dan Wagner says, yes, sir. I take it as they plan to announce the deals, but more importantly, report quarterly and update current ARR. He said this on the same day as he replied to Carlos Moda on X as well. So, even to report quarterly, I don't think the shorts in Rezolve know that is on the horizon as well, which that is a big deal, right? It adds a lot of legitimacy to Rezolve while it's still in this hyper growth baby stage of the business. Okay, so I think there's a lot to like here heading into the end of the year, heading into, some of these catalysts from Rezolve. Again, I could be wrong. I am not a financial advisor. I am not a financial planner. Like, come to your own conclusions here. But I think there's a better chance that Rezolve's going to be $4 plus per share before it's below $2.50 per share. So I think there is, on a risk reward basis, a lot more potential near-term upside than near-term downside. That's my opinion. Again, not a financial advisor. Contact one if you have any questions, if you don't understand what is talked about in these videos. So that is it, ladies and gentlemen. Hit the like button as well as subscribe to the channel if you have not done so already. Check that link out down below in the description of today's episode as well if you guys would like to come join the trading community. But with that said, have a great rest of your day, and I will see you in the next one.